So the trading view app is where you analyze where you spend most of your time in. You use that you stay, you watch price, you watch the way price moves, you watch the way price reacts at certain levels. You, this is where you speculate price and also you look out for where to buy, where to sell. The only reason why you need your MT5 is because the MT5 is the terminal where you click the buy or sell. You can also do that here, by the way. If you see. If you notice, if you look up, you'll see a buy and sell button. It's just that for you to do that here, you have to log in. You have to you have to log in your broker into your trading view. And trading view, yeah, they mostly take institutional brokers. Basically, brokers that trade institutions. So basically, brokers that work with the banks and stuff like that, they mainly don't work for trading. We mainly don't trade asset brokers that work with retail traders, like you and I. I guess so. That's basically why you can't use trading here. But some brokers too. If your broker is an institutional broker, you understand, you can make use of trading. There are some brokers too that take both retail and you can also use them on the institutional level too. So you can use them here. So that's just it on TradingView. That's why you can buy and sell on TradingView. But apart from that, you can basically buy and sell on TradingView. You understand? So some kind
I
of
got a question, sir.
yeah.
Is Access Market not an institutional based
Nah, it's
broker?
only basically just a retail broker. They are still not yet, those things take some kind of regulations on a higher level. So, but they are regulated on like just basic levels, but on that institutional level, they're not yet regulated.
Okay.
So, so like means,
Sorry,
they
please, I
can,
also have a question. So, are there any disadvantages of not being
there's no
able to
really
trade directly?
disadvantage. There's no really disadvantage for you and I, because basically,
Okay.
none of both you and I'm not sure we can ever trade with. Wait, I'm not, I don't know, level, not limit ourselves. Well, we can basically pull, pull up to $100 million in Forex now. Can we? Is there anybody here that can do that? Up to 150 million. Yeah. So if when you're looking at that,
Never
that
say never now.
eh? Can never
Never
see
say
never.
never.
Okay, when we
That's
get
why he said, "Mhm," but at least let's start from where we are.
yeah, exactly. When we get to that bridge, we'll cross it. So you get so, but for now, there's nothing harmful, just you can still trade it there, you can still make use of them. But when you begin to transact, in millions of dollars and higher, you can now, that's when you begin to like, okay, let me check these broker regulations very well. Let me see if they can be able to carry that amount of money. You understand? Because you really want to, that's a huge amount of money you don't want to play with. So you want to see if they have liquidity for that amount of money. You understand? So that's just basically it when it comes to institutional trading. So it's just basically liquidity. They have like all these brokers that are institutionalized have like large liquidity. Basically, they have like billions and trillions of dollars of money as their reserve funds to pay traders and to transact with. So that's the only reason why you can make use of Access Market on TradingView. But apart from that, and some other brokers too, most brokers. But apart from that, TradingView you can also buy and you can also sell, right? So, but TradingView majorly is just used to analyze, it's used to speculate and used to study. You can do a lot of study on TradingView. You can back test, you can go back in time to check previous price action, you can even build your strategy. There are a lot of things you can do with TradingView, by the way, but I'll show you guys one after the other. So firstly, yeah, you have your menu button where you can sign in your account, you can sign out your account, you can do some settings that has to do with the application right here. So I don't know if you guys are following my mouse. After the menu button, you have the uh currency where you search for currency pairs, like I showed you guys last time, where you search for currency pairs here. Now, after that, you have what we call the what have I forgot? Time frame. You have what we call the time frame. So time frame has to do with these candlesticks. These things are called candlesticks that are moving up and down your screen. These stuffs are red and green color. They're what we call candlesticks. Hold on, let me silence this indicator. So these stuff are what we call candlesticks. So candlesticks basically are just visual representation of where price is at every point in time. You understand? So they kind of indicate where price is at every point in time. So that's the work of candlesticks. So you can even change, there's a place you can change it from candlesticks. You can use what we call the line. You can use the line chart, you can use the bar chart, you can use the graph chart. But as forex traders, we mostly make use of candlesticks to show us where price is. And also, when it comes to technical analysis, candlestick is the best for technical analysis. So now, each of these time frame kind of works with this candlestick. So see here where I'm on 8H. 8H means 8 hours. 15 minutes means 15 minutes time frame. 5 minutes, 5 minutes time frame. 30 minutes, just basically 30 minutes time frame. 1 hour, 1H, 1 hour time frame. The D stands for daily. The W stands for weekly.
I'm not seeing where your mouse is. Sorry.
My mouse is at the top, just beside the currency.
Okay. Yeah, I can see it.
So, uh, sorry, give me a second.
I have a question real quick.
Yeah,
If you
shoot.
want to expand so that the letters get bigger, how do you do it?
Letters.
Yeah.
I think by did for your settings. Well, yeah, I think so.
Mm.
It should be around here, so.
Mm.
But I've never ever thought of that before. But let me see. It should be around here. It could increase your
Yeah, I can
yes,
see
you have to
font,
it.
the font size,
Yeah,
text.
so you
Yeah,
can see it here.
yeah. Maybe put it
So
like 20. Let's see what happens at 20.
it's big. You can see it's very big at it.
Yeah, exactly. So it's
That's
on there.
I use step. I like to use step. Okay, want me to leave it for because of you to see? Do you want me to leave it?
Because I use glasses, so
Okay, okay, okay. For
uh,
your own
uh,
settings, you can. So this way you find it. I don't
got
know if
you.
you see where my mouse is at the top.
Yeah, yeah.
Settings.
I can locate it next
Yeah.
time. Thank you.
So you can just do that on your own piece. So we have this time frame back towards this time. So 8 hours means that each of these candlesticks, there's no time or have like since. Eight hours means each of these candlestick forms every 8 hours. Yeah. So this now in the next like 1 hour 38 minutes, this candlestick is going to stop. Another one is going to pop out. So that's what each of these candlestick represent. If I take it to 15 minutes now, you will see that the chart will change. It will give you something different. So you see that now the next 15 minutes count is going to come out in the next 9 minutes 25 seconds. So it has a timer on it. There's a tiny dotted line, that's on each of these that's on your current candlestick. Sorry, I mean there's a dotted line that's on a current candlestick. That your current candlestick, we trace that dotted line. So to the right, you are going to see a box, a rectangle that has the timer. The timer is always counting down to when the next candlestick is going to pop out. So if you change it to 5 minutes, you will see that we have a timer. You have it, the chart has changed a bit again. It's telling you that the next candlestick is going to pop out in the next 3 minutes, 45 seconds. So that's just it about this time frame. So this time frame works with this candlestick. So each of these candles, just telling you that each of these candlestick forms at exactly the time frame. So if you're on the daily time frame, it shows you that each of these candlestick forms daily. The chart will even change. You will see also the timer is also counting down to when the next daily candlestick will form. Now you might ask, but 24 hours is not going to be up. In the next, like we still have like 3 hours more of so for the 24 hour. But trading, remember, the forex market closes by 10 p.m. every day. Opens, it closes for like 1 hour. But for some currency pairs, it just closes for like 10 minutes. So, but it closes like it ends, every trading day ends by 10 p.m. It continues again after 10 p.m. But that's just it. So that's it for the time frames. And also another reason for the time frames is because of what we call, we have what we call trading sessions, and we have what we call trading sessions. Now we have different trading sessions based on the fact that we have, the forex market is controlled by banks. Basically, the forex market is just a market that's controlled by banks. So, and we are trading currency pairs, and also we are trading like stocks. We are trading stocks and currency pairs, which has to do with, a country economy or a company economy. Right. Now, those countries and those companies actually have physical locations and actually have their working time. So we have different trading sessions to represent those currency pairs or those companies. So we have like the London, the New York, the Sydney, and the Asia. So the London session actually works for pairs that actually is for pairs that operates in the Europe. Like for instance, the GBP and Euro are kind of like for the London sessions because obviously that's their time zone. So the London session is for any currency pair that has the Great Britain pounds to it or Euro pounds to it. So for instance, GBP USD, Euro USD, you can actively trade them during the London session. And why can you do that? It's not that you can't trade them outside of their session. You can trade them outside. In fact, you can trade any currency pair at any point in time. But the reason why it's advisable and it's 100% always advisable to like trade them according to their trading session is so that when during their trading session they have volatilities. That's when that currency is volatile, and that's when their banks are operating. So basically, your trades will kind of like move well during their trading session. If you are trading outside their trading session, you'll see your trades will kind of like lag. You won't be able to your take profits. Price might not hit your take profit or your stop loss early. If you are trading them outside of their trading session, or price might even market might manipulate you, might take you out and eventually go in your direction. So that's just basically it for trading sessions. But it's not like it's 100%. It's something you just need to know, but it's not something that 100% affects your trading skill or yeah, that's just it. It's just something you need to know at the back of your mind that okay, if I'm trading a GBP USD, if I'm trading a GBP pair or Euro pair, I'll likely want to trade them during the London session, or it's best to trade them during the London session time zone. So the London session is usually morning, Nigerian time, basically from like 7 to I think like 2:30 or so in the afternoon. Then we also have the New York session, which starts in the afternoon. We have the pre-New York that starts by 1:30 p.m. Then we'll have the official New York opening time that starts by um I think by 2:30, yes. You also have the pre-London, I think they call it the Amsterdam session or what there's a name they call it. So that one is also by 6 to 7, but official London session opens by 8 sharp. Then we also have the Sydney and the Asian session, which are midnight Nigerian time. Those ones run midnight. So they run from around anywhere around 12 a.m. Nigerian time till like 6 a.m. Nigerian time. So that's for Sydney and Asia. Sydney and Asia are categorized on that. Just they follow the same time zone, but London and New York are different time zones entirely. So that's another reason for this time frame too. Then after this time frame, you have this where you can change your candlesticks. You can change this, like I said, you have the line charts, you have the graph, you have different things here. You have the holo candles, you have different types. But this, you're not going to tamper with this. This is always left as candles. This is always, you always leave this here. Like, there's no point in coming here at all. Try your trading career. I've never tampered with this level. Except maybe you invent a strategy or you learn a strategy that's compulsory that you use a different candlestick. So that's the only reason. But since I'm the one teaching you, I don't expect you to come here or change anything here. Then we have the indicators. These indicators are like added tools that makes your kind. I don't think it makes your trading easier. I just feel like it's just like an assist. It helps with your trading. So we have different indicators. Like me, I have the one for session over here. The session indicator kind of differentiates the different trading sessions for you. So it will tell you, it separates them with colors. Like if you see on my screen, if I turn it on. So it kind of separate them with colors. So because I set mine this way, so I automatically know what session this is. This is still New York session. The the white space is Asia and also London. Then this brown space is New York. So just the way I set it for myself. So, but you can do yours the same way if you want to make use of the session indicator. So once you come here, you click on the indicators, you can search for it, just session, you see it. So it's the first one. So we have indicators for different things. There are indicators that tell you to buy or to sell. There are indicators that also like there are indicators for different stuffs. You understand? It's just like an added, tool that makes your trading like I don't want to use the word easier because even with itself, your trading is not still easy. You can still use it take loss. So it's just an added tool, that just helps with your trading. So that's it, indicators. So we have different indicators for different things. We have for sessions, we have for like there's another indicator I have here, but I don't want to talk about it because you don't need to know about it now. It's during your master class, you'll know about it. So we have different indicators for different things. So we have the ones that can tell you when you have the ones for news, that's fundamentals. We have indicators for news that will tell you when certain news are happening. We have different indicators for like Fibonacci. We have different indicators for trend that will tell you what market trend you are in. You have different indicators for like that's what I say for different things and for different strategies. But me basically I don't make use of the only indicator I make use of is this session and this guy, this other one. So I'm really not a big fan of indicators. I'm not. I like to trade naked charts. I like to trade just as naked charts. So I'm not a big fan of it. So you probably not see me teach you anything about this guy. So then we have the alert. The alert is used to like if you see on the screen, I have like you see like this one that is an alert on this line. So basically what it does is once price gets to that line, it's just going to ring like it's going to ring so loud that even if you are sleeping, no matter the deep sleep, you're going to wake up because this guy rings very, very loud. Especially if you're using it on a PC or your laptop, like it rings so loud. So we are need to also send you an email. So all you just need is your you should have lights. Like all you just need is power. Your PC should be powered on. It will send you an email and it will ring so loud. So that's what it is for. So you can set alert at any price that in case you are busy and you want to take a trade at certain price or you want to check your chart at certain price level, you just set an alert there. So that's the work of that. Then we have the replay. This replay is for going back in time. I'll mostly be using it to teach you guys a lot. So it's for going back in time to check previous price action. Now, you see if as I use this, that's cut off all the current price action. It has taken me back in time. It's like as if this current price action did not occur. So that's the work of the replay. The replay will take you back in time to see previous price action. You can also use it to, we'll call it, you use it for back testing. And you can also use it to test out your trading strategy. Then we have the undo and the redo button. This is the undo and the redo. Then you have this search to search about, let's say you are looking for a tool or an icon or trading view, search for it here. Then you have the settings button, you have the full screen button, then you have this screenshot button. This guy will take a screenshot of your charts, or you can copy the image, or you can send it as link, or you can tweet about that chart. So then we also have this one if you want to link your broker to it. So these are mostly like if you want to link your broker to your trading view, this is it here. So it's this now. This is showing you all the brokers that you can use to trade with your trading view. These are the recommended brokers you can use to trade your trading view. And these brokers have liquidities for institutional trading. So that's why they are recommended here. So you can also search for it in case you have some that you can't find, you can search for it here too. But access market won't be found here. So we have okay, I'll explain this. Then yeah, if you want to this If you want to share your ideas, it's what we call the general trading community all over the world. If you want to share your trading idea or you have anything, that's on your mind that concerns the charts. I've never used it before, but it's like a trading community share all over the world. So it interacts, they share news, they talk. Yeah. Then this is what we call the watch list. So this watch list kind of like, is where you add currency pairs that you want, yeah, that you mostly trade, or you keep your eyes on all the time. So it's where you add currency pairs. So you click on the plus sign, search for the currency pair, and just add it. It will add it here. So watch list, I have a few. So these are not all the currency pairs we have on TradingView, but these are the ones that I regularly just analyze or I teach with my students. So, but I trade only two. I trade only gold and BTC. But I have a lot here because of my students. I use them to teach or practice or just study with. Then we also have the alert here. This one is for the alerts. This is every alert I've set. So I have like few alerts here. I have alert on gold, I have alert on silver, I have alert on BTC, Euro USD, and stuff like that. So these are just where you see all your alerts you've set on your trading view. Then we also have this one is just for this one you use for uh creating your trading strategy, your trading system. And also then this is where you have the trading community generally. This chat is the same thing as it's published. So this is where you see where people talk, like people just chat a lot. Yeah. So anyway, that was it for this Ohan group. Then here we'll move to this place. This is what you've been using
Sorry,
mostly.
please. I have a question, please.
Yeah,
Sorry.
shoot.
What's the difference between the alerts you said and the alarm you said earlier?
The what?
You mentioned the alarm ringing out earlier, and then
Yeah,
you
it did
now
like
talked
this. The
about
same thing,
alerts.
like this alert and the alarm. That like if you set an alert here, this is where you set the alert. This is where you see all the list of alerts you've set. Do you understand? So this alert now is same thing as the alarm now. It will ring. Once you set the alert, it will ring as an alarm to you. Then this is where you
Okay,
see all the
I get it.
alerts set. So that's it's nothing. I'm just using different grammar.
I have
So
a
that's
question.
yeah, I should.
Yeah, so on this side, you showed us all the indices. You showed us your BTC. Which one is gold? Is gold? I didn't see gold, but I saw BTC.
Gold symbol. Gold has a symbol that is not mentioned as gold. It's called XAU USD. Anytime you see this symbol, just know that this is gold. XAU.
SAU is gold.
Yes, XAU. So that's why you see that at the top of my list here. So
Oh, okay.
XAU USD. That's the symbol for gold.
Okay, that's
So
gold. I
anywhere you
see.
see it in this world, you just know they are talking about gold.
Gold. Okay.
Yeah.
Okay. When I saw the SAU, I was thinking it's China currency.
Nah, that's gold. Anywhere you see it in this world, like just know they are talking
Mm.
about gold.
Okay. Then second question. Right now we use Access Market
Yeah.
uh, as a broker. Now,
Hmm.
can you use more than one broker? For example, you said under TradingView that
Yeah.
Access Market cannot be found.
Yeah.
Can I decide to also use a second broker under
You can, you
TradingView?
can, you can, you can use one. You can have like it's like bank accounts now, can't you? You can have multiple bank accounts now. Am I wrong?
Very true.
Exactly. These guys, these are the tools used for technical analysis. You have the cursor. This cursor kind of like moves around your screen. So you just like where you have different cursor for moving around your screen. You can use arrow, whatever. So this is called the cursor. So now that I'm teaching, I'm supposed to make use of this one, but forgot. So this one is for like you see demonstration, but it's mostly here. This is the cursor that is mostly always used on TradingView. But if you want to teach, use this one. You have to explain something to somebody. So the next one is this line. These are the next icon is the line where we have different lines. So see this line I drew here is called the horizontal ray. This is it here, horizontal ray. Then we also have the horizontal line. This is how the horizontal line looks like. So it's quite different. And you can change the color, by the way. I'm just the one that set all this color to ash. You can change the colors of all these things here. So let me show you how. So you guys are. So let's say if you select a tool and you want to edit that tool, as long as that tool is still selected, or at the top of your screen or just on your screen, you see this extra box will pop out. This box pops out. This is where you can do any settings on that particular tool. And like I said, like this now, I can add an alert on that line. I can also set the line to whatever color or anything. I can lock the line to this particular place and I can delete the line. I can also add a text. I can also change the line color. So you just, this extra box is where you can add, do any extra feature on that tool. So it always pops up when you select any tool. So we have different lines. So the lines I've used the most is the horizontal ray and the horizontal line. Those are the lines I use the most. Then we also have the trend line. And a trend line is a beginner-friendly tool and also a tool I advise you guys always use. I use it from time to time, but I don't use it majority of the time. The reason why I don't use it majority of the time is because I kind of like I've trained my eyes to identify any trends. So this is a topic on its own trends. So that will be like next week. The topic we'll treat that topic next week. So trend line is a tool that you guys will use a lot. You must use it a lot. So trend line. So another tool that you guys will use a lot. So those are the only three tools I use in this place. Is that I use this trend line, the horizontal line, and the horizontal array. And you can also make them your favorites by just clicking on the star. So if you make them favorites, it will have its own box at the top here. So that's it for these guys. So the next one is called the Fibonacci tool. The Fibonacci is also a topic on its own, on which I'll be teaching you guys soon, either your second week or third week. So it's called the Fib retracement. So that's the only tool I make use of here. Then we also have the pattern. I don't make use of any tool here. Then we have the long and short position tool. The long and short position tool is used for analyzing the charts. It's used for analyzing buys and sells. So, for instance, if you want to calculate your stop loss or your take profit, there's what we call stop loss and take profit. Stop loss is an order you set that cuts your losses short. Instead of you losing all the money you funded into your MT5, if you use a stop loss, you'll be able to lose a particular amount of money. Same way, if you use a take profit will just give you a particular amount of profit. So the long position and short position tools are what we use to calculate stop loss and take profit for our trade. The long position is used to calculate stop loss and take profit for buys, while the short position is used to calculate stop loss and take profit for sells. So this is it here. This is the short position tool. This guy here. There's a short position tool. This is the long position tool. So you can see that it's opposite ways from this one. So you can see this one, the green is upwards. So this green section is your profits, the take profit section. The orange section is your stop loss section. So that's just it for this particular tool. Now, the numbers above are what we call pips. Now, pips are what used to calculate price. Is that pips are like what used to calculate price. They are measurement for price. So there is a measurement tool for price, pips. Just like you have your height, your meters, your feet, stuff like that. So for Forex, we use what we call pips or points to measure price. So pips is used to measure price movements. You understand? Pips is used to measure price movements. Hold on. So pips is always to measure price movement. So we have the pips, we have pips and points. They are basically the same thing. So anyway, price moves in pips. So you can, if you want to calculate how many pips price moves from here to here, is also this tool, the long and the short position tool. Then we have the shapes tool. That's the next icon. We have the shapes, the rectangle.
Sorry, please, I have a question.
Yeah,
The short is to sell or to buy?
the short is to sell. Anywhere you hear short, it's just for sales in Forex.
Okay, so when we do our short position, that is when we are trying to sell
That means you're
a
trying to sell something exactly.
okay. And on top of the icons, I could see amount and whatever. Is that where is that the amount we are trading or what?
Yeah, on top of the what?
On top of the short and the long trade of stuff, this red and green on top, I could see amount. Is that the amount we are trading, or what was the amount all about?
Well, yeah, now on top, yeah, you saw
Yeah, yeah,
amount.
you can see amount. What's
No,
that?
that's not the amount you're trading. So basically, the these two that you see here, the only figure you have to worry about is the one that comes before amount. You understand? It's the figure that comes before amount. That's 16,000. That's what you have to worry about. It's the figure that comes before amount. So every other figure there, just ignore it. Same thing here, the figure that comes before amount. Then the one in the middle is the risk to reward ratio. That's the one you should be bothered about. So that figure that comes before amount is the peak value. Is the peak value. That's the peak measurement for this trade. That means the peak value from here to here is kind of like, it's not 16,000 exactly. I will look into, I'll tell you guys more on that, like probably in the next class when we are doing treating MT5. On MT5, that's where you need to know more about these peeps. And it's also a topic too, which we are supposed to treat so on its own. So I don't know. I'm just showing you guys how to use this tool. I don't really want to go deep into the other section. So yeah, I'm just showing you guys where to find all these tools because once we start teaching now, I will make use of all these things. So you guys don't start asking where did I pick this from, where did I pick that from. So we have the text tool, which is this is just to like type on your screen or to take note of anything. Then you also have the emojis. Then you also have the ruler tool. This ruler tool is another tool you can use to calculate pips. So, but this one does not work for short or long position. This just calculates a pip value. Just tells you how many pips the price move from here to here or from whatever distance you want to calculate from. Then we also have the zoom in and the zoom out. Then we also have the magnets. So this kind of like keeps your tools at a specific place. Then you also have the lock tool to lock a specific drawing and also to lock all your drawings. Then you also have the hide all drawings. Then you also have the sync drawing. Then you also have this way to delete all your drawings. Anyway, that's just it for this trading view guy, this trading view thing. That's all for trading view. Any question? Are we good?
Yeah, so I shared my screenshot, like you said. I just wanted to
Okay,
look
I've
at
not
it. It's
seen
in
it
the chat
on the
room.
WhatsApp or this chat
In,
box.
in this chat room, yes, please.
It's not that different now. There's nothing different. It's the same thing. The only thing different here is this stupid indicator that is down here, this guy here. And you can delete it too. You can delete it by clicking on this volume. Then you see the trash button beside it. Then you just change your currency pair. That's all.
We can hear you.
Okay, good. So let's go. So for those of you that are just joining us in general class, hope you guys have you guys registered with your broker. If not, I'm just going to drop a video that you guys will go and watch to sign up with the Access Market. If you've not signed up with Access Market, Mr. John Wosu, and if you've not, please try and sign up with Access Market. All right, so we're going to just go straight to what you guys need. You guys need to download TradingView app. Go to your web browser, look for TradingView. This is the application, by the way. TradingView. Search for TradingView. Download. TradingView download MetaTrader. Then download MetaTrader 5. Then also my fxbook.com. Then also I think this is all. Then register with Access Market. So if you don't have the link to Access Market, I'll just drop the link in the chat box right now. You can just register with Access Market and let me know when you're done. Then also, while you're doing that, let's get straight to this. So I've dropped the Access Market in case you've not registered with Access Market, register with Access Market. Then also, now download all this TradingView, download MetaTrader 5 and download my FX book. So this is TradingView. Basically, this is the app you use to analyze the forex market. And this is the app you use analyzing. This is where we'll be teaching from. This is where we'll be doing most of our studies and everything. Then the MetaTrader 5 is the app where you just click your buy and your sells, where you buy and sell. It's just for buying and selling. Close your trade, monitor your trades. It's where you buy, you sell, you monitor your trades. My FX book is an application for fundamentals. In trading, it's all called fundamentals. Fundamental trading is the aspect of news and world events. It's the trading that has to do with news and world events. You are trading based on news and world event, economic news. Like we have different kind of economic news. We have the example, we have GDP, gross domestic products, we have CPI, consumer price index, we have NFP, non-farm payroll, we have different fundamental economic news. You understand? So those are just few examples of few economic news examples. Then we also have world events like war president speech, like our favorite world leader, Trump. We also have central bank speech, governor speech. So those things also affect the forex market. Just the election. So that's the fundamental aspect of trading. So fundamental trading has to do with the trading of news and world events. There are three types of trading. There's technical, which we'll be doing most of the time, technical analysis. Then we have fundamental analysis. Sorry, also for fundamental analysis. They also have sentimental. Now, I'll classify this academy, as sentimental traders. Why? Because sentimental analysis has to do with both. It uses both technical and fundamental, right? But again, me personally, I'm more of a technical analyst than fundamental. In fact, these days, because I don't trade most pairs, I just trade two pairs. I really don't focus much on fundamental. You understand? But I also make use of it, especially when there's war or when there's an election coming up, or just especially crypto. I like to look at crypto news most of the time because I'm trading BTC. So fundamental, and we are mostly sentimental. Sentimental has to do with technical and fundamental. So you are making use of both your technical and your fundamental to produce a trading result. So either buy or sell. You're using both technical or fundamental to either buy or sell. That's one. Then, so this my FX book is used for fundamental. TradingView and MetaTrader 5 are both used for technical analysis. You understand? Why sentimental is that there are websites for sentimental too, kind of. Polymarket.com is a website that you can use to also do for sentimental analysis. So that's it when it comes to the three types of trading. So we also have also another thing you need to know is we also have sessions, the trading sessions. We have trading sessions. So we have the 3 trading sessions. We have the New York. So we have the London session, the New York session. Then we also have the Asia/Sydney session. I hope you guys are following. So we also have the Asia and Sydney session. So that's it when it comes to this. So we have the Asia and Sydney session. Now the London session is basically has to do with currency pairs. You know what, in forex market, what we trade in forex market is currencies. We trade currency pairs either in crypto, in stocks, or indices, or futures, or your regular country currency pair. So the London session has to do with any currency pair that their time zone, especially your country currencies like the euro and the GBP. The GBP and the euro are what are mostly traded during the London session. While the New York session has to do with, currencies that their time zone are in New York. So, for example, the USD and the CAD are mostly traded. Any currency that is paired with the USD and CAD are mostly traded during the New York and the New York session. While the Asia and Sydney has to do with the JPY, the China, and this Asia and Sydney has to do with NZD, NZD, AUD, JPY, and any Chinese China currency pair, and they also Korea, and also let me see. I think I'm going to forget some. And we have the JPY, yes. We have the CHF. I know that there are few. The CHF, the AUD CHF, card, sorry, AUD CHF, NZD. Yeah, those are Sydney sessions. Then also JPY fall under that. Why the Euro and the GBP falls under the London session, why the USD and the CAD falls under New York session. So they has to do with their time zones. That's the reason why we have the different trading sessions. And not like you can't trade these currencies outside of their trading session. You can actually trade them outside of their trading session, but it's just that they are best traded during their trading session. They are best traded during their trading session. So that's it for these guys. What else again? So I've given you guys the currency pairs. So we also have now when it comes to currency pairs, you also have different um types of currency pairs. We have currency pairs that fall under the forex category, and we also have currency pairs that fall under the futures category. We also have currency pairs that fall under indices category. We also have currency pairs that fall under crypto category. We also have currency pairs that fall under commodities. Commodities. Now, the forex category, you guys know are your USD, your CAD, your GBP, your Euro, your stuff like that. The NZD, these are your forex categories. While your future categories, the future categories falls under, let me confirm, for your futures fall under NASDAQ NQ, which is NASDAQ. And somebody say can't hear anything. Please, can you guys hear me?
Yes.
So
We can hear you very well.
somebody said they can't hear anything.
I have a quick question. Can I ask a
Yes,
question real quick?
shoot.
I just downloaded the myfsbook.com and it took me to linking my MetaTrader 5 account.
Yeah, if you want to do that, that's an application that journals your trade for you too. Just like similar thing to what I built. It's an application. In fact, I got the info from them. So it's an application that you can also use it to journal your trades. That's the truth.
But I'm not able to get my broker in here. But that is Access.
You can get
Access
it in there.
Market.
Why not? If you can. But I'll have
It's
to
not
show you
showing me
that.
Access Market.
You have to search
not-
for it.
I have searched and searched. I can't
It's
find
there, don't
Access
worry.
Market.
It's there. I've
It's
linked
not
that.
ASSEX.
Yeah, Abby. Yes, now I've linked Access Market before. I've linked Access Market to my Facebook.
I can't find it. Oh, yeah, you're correct. It's there.
Nah,
I've seen it.
I know that.
The account number is going to be my bank account number or what?
Account number is that login number now that is showed on as when you were logging in your Access Market. That login number, that's the account number.
I hope it's this number I have here.
That number I showed you now, that's your account number.
I just hope I see I wrote a number somewhere. I just hope that is a number. It was 2114629, right? I
Yeah,
don't know
yeah,
if
yeah,
it's
that number that they sent your email with your password. That's the account number.
okay. Sorry, I took you away from what you were saying.
Nah, no worries, cool. So let's get back to it. So what were we saying? Oh God. So talk about the sessions, how we're talking about this currency pairs. So
You were,
futures,
yeah, you
yeah.
were talking about futures.
So futures actually, so, yeah, futures is another style of trading too, but it's just that futures pairs can be taken from currencies, from indices, and also forex pairs. So each even crypto has its futures, like is another aspect of what's this person saying? I say Zoom now. It's I'm gonna update your. Hold on, please. Can somebody help out this person in your Telegram chat that's finding it hard to log in Zoom? Just,
Let me look at the charting.
just click on the link now. Person is distracting. Let's see if does this same link everybody join this is. So anyway, futures is just another style of trading. In fact, almost all the currency pairs have their futures trading. You understand? So it's not really much of a big deal. Then we have indices. Indices has to do with your Nasdaq, yeah, Nasdaq, US 30, Germany 40, and UK 100. Those are indices. Crypto, you obviously know BTC, ETH, Litecoin, XRP, they all fall under crypto. Commodities, you have like oil, cocoa. Oil, the symbol for oil is WTI, by the way. WTI. Then you have your cocoa. Then you also have, I don't know the symbol for cocoa, I forgot it. Because I don't trade them. But they all fall under commodities. Then you have metal. Metal falls under gold, which is the symbol for gold is this XAUUSD. Then you also have silver, XAGUSD, symbol for silver. I know this because I trade them very well. Crypto, I mostly trade only BTC USD, so I'll give you that as reference. Then indices, I do a lot of NAS 100, US 30, Germany 40, UK 100. So these are like your indices. So now futures, yeah, most of these currencies have their futures too, and their future aspects. So that's it. That's it for the currency pairs and their categories, like the examples of different categories of currency pairs and their examples I'm giving you guys. So these are mostly what we trade in the forex market. You understand? And what you mostly be trading in the forex market together, you and I. So I've talked about technical analysis, fundamental, sentimental analysis. I've told you about the different trading sessions we have, right? So and let's do some more examples. But before that, what is a financial market? Financial market is a marketplace that provides an avenue for the sales and purchase of assets such as bonds, stocks, foreign exchange, and derivatives. Now, what is Forex? Forex is a word we derive from two other words, foreign exchange. Forex is the buying of currencies online, which I just explained. E.g., I've told you the platform we use, MetaTrader 5, and all the old platform was MetaTrader 4, but MetaTrader 5 and TradingView is where you can actively trade the Forex market. Forex is a global, decentralized, over-the-counter financial market for the trading of currencies. Forex being an acronym for foreign exchange involves the online buying and selling of currencies and pairs. Yes, each of those currencies that I mentioned are actually paired together and traded in the Forex market. And Forex is the largest financial market in the world and has a $6 trillion daily volume compared to any other market. So trading in the Forex market will require you to use 5% strategy, which basically means most of the things you'll be learning here, all the things you'll be learning, most of the things you'll be learning here, that's on TradingView here, like learning how to analyze the charts. Most of the things you'll be learning on how to analyze the charts, right? Most of the things you'll be learning on how to analyze the charts, how to speculate price. You only need it 5% of the time when trading, to be honest. You understand? Why? You need 5% risk management, a good risk management strategy, which you will learn. Then 90% of the time while trading, you'll be battling with what we call psychology. You'll be battling with yourself. So strategy will teach you how to trade. Risk management will help you remain in the market, and your ability to manage risks will also help you build your psychology. Risk management will help you remain in the Forex market 100% fine and good. You understand? Risk management is what will keep you long term in the Forex market. Like if you want to last as a beginner, if you know that you want to really last as a beginner and you want to learn how to trade and you want to last till when you become profitable, you need to learn risk management. Unless without risk management, you will not survive your first 3 months in this game. Strategy will teach you how to trade. Yes, I'll teach you this myself. I'll teach you my trading system. I'll also teach you the good risk management plan. But what I cannot help you with, I'll only tell you this based on my experience. I'll only talk more of this based on my own experience. But I cannot teach you how to be disciplined. It's something you have to learn. So if you are someone that listens, you can basically, just learn from my own experience. More of Forex. An example of when you participate in Forex is when you go to different countries and exchange one currency for another, like your local bureau de change. Buying currency is like buying a share in a particular country, almost like buying stocks of a company. The exchange rate of a currency versus other currencies is a reflection of a country's economy compared to the other currency's economy. The Forex market does not have a physical location or a central exchange. The entire market is run electronically within a network of banks over a 24-hour period, 5 working days a week, which is also known as an over-the-counter OTC or interbank market. What Forex is not? Forex is not gambling. Forex is not a get-rich-quick scheme, and Forex is not a Ponzi scheme. Note, Forex is not gambling. So it doesn't, Forex is not gambling. Don't fund any money you cannot afford to lose. Any money you are funding into the Forex market, make sure it's like money that you're using to buy biscuits. Or you're using to, basically what I mean is money that you spend to, like, let's say, let me use the word flexing. Money you use to enjoy yourself. That's money you should be using to fund market. Not gonna fund your house rent or your school fees into the Forex market. Forex is not a get-rich-quick scheme. Yes, because it takes you time. I've been trading for 4 years. Habi has been trading since 2019 or 20, no, not before 2018, 2019 or 2018 or so, but before 2019. So Habi has been trading before then. So you don't compare your 1 year journey to someone's 10 years journey. Forex is not a Ponzi scheme. Small, small. So we have different platform you can trade it. I've mentioned them. TradingView, I've told you guys to download it. MetaTrader 5, I've told you to download it. You can get them on your iOS, your Apple Store, or your Android Play Store. If you are using Windows, you can get them from the Windows Store. I've talked about the different assets you can trade. I've talked about crude oil, gold, iron. These all falls under crude oil, gold, iron, oil, and coffee. All falls under the commodity section, except gold. Gold and iron falls under metal. This falls under commodity. This and this falls under metal. Then we have the stock indices. That's NAS 100. I've told you NAS 100, US 30, UK 100, S&P 500. Then we have the cryptocurrency, Bitcoin, Ethereum, XRP, and stuff like that. Then we have the currency pairs, your USD, your GBP, your cards. I've mentioned this to you guys. So different major ways you can trade the forex market. I've also mentioned this. You can trade the forex market through fundamental, technical, or sentimental. I've said this, I've explained. Fundamental is the trading of news and world events. That's what my FX book is for, or my forexfactory.com. Then technical is basically technical analysis. You're using the chart, you're using TradingView, you're using this application to to analyze the market. Then fundamental, I say that this aspect of forex trading deal with macroeconomic data or variables of different economy over a period of time, which shows the state of nation and has reflection on its currency. Macroeconomy are GDP, unemployment rates, inflation, industry rates, political issues, natural disaster, terrorism. I've explained this, that fundamental has to do with news and world events. Technical analysis, this aspect deals with things that can be seen on the trading platform. You understand? E.g., your candlesticks, your chart pattern, that's TradingView. This has to do with technical analysis. This is technical analysis. Then we also have sentimental analysis. This deal with the general opinion of market participants based on fundamental reasons or technical reasons or both. So sentimental analysis has to do with both, has to do with both fundamental and technical. You have to use fundamental and technical to come up with a bias, to come up with a market direction. So that's sentimental analysis. Cause of failure in the forex market. You have greed. Obviously, when you are greedy, greed can't work in the forex market. If you ask someone that's greedy, you will lose. Revenge. Revenge trading. You lose money today, you want to get it back today, you want to get it back tomorrow. That's revenge trading. Pride. If you are the type that you force your own opinion on the market, you will lose money. You won't be profitable. Let's say market is telling you sell. Market is showing you that you have to sell, but because you think you are to buy, or because you have a strong conviction that you should buy, you are going to lose money a lot. This is something a lot of traders deal with a lot of time. I also had issues with this pride, but I really never had issues with reverse trading because I immediately I started it, I stopped it. It was not automatically you stop it, except I don't know, except you are someone that can't control yourself. Revenge trading is bad because this is something that you lose heavily with. So immediately this was becoming my problem. It didn't even take long. I just stopped it because let's say you lose $20 today, tomorrow or later on you want to collect that $20 back. I'm telling you, you lose 50 or $100. So this one takes a lot of money, costs a lot than even this or this. So fear is just basically you being afraid to take a trade, you being afraid of your own analysis, lack of trading plan. If you don't have a trading plan, you can't be profitable. If you are not journaling your trade, I always advise every beginner, if you are just starting, journal every process of your trading journey. Journal it. And why journaling? Because this journaling is what will help you to build this. Journaling is what is going to help you to build a trading plan. Lack of patience. If you are impatient, you will not, because trading is mostly waiting. Trading is a waiting game. It's a game of waiting. You wait tire. Like today now, like this week, I've only traded on Monday. Though I did one scalping this night. That was because I needed one quick money. So I just did one scalping to make one sharp money. But I didn't just basically take it as trading. I didn't trade it on my main account. I just used one money that I didn't have any use of. So, but if you are a trader, you mostly be waiting. I really traded on Monday. Monday was the only day I took a trade. I've not really traded for the rest of the week. So you mostly be waiting. You will not be trading every day. Like you won't trade every day. Over trading too, the same thing. They go side by side. You understand? Lack of discipline, you will not be profitable. Wrong timing, the same thing with impatience. Wrong expectation, you start kind of goes with pride. Focus on money, not growth. I always advise beginners your first 6 months in trading, use it to learn. Forget about making money your first 6 months. That's it. Like this is like the best advice anybody can give you. The first 6 months, forget about making money. Just focus on trying to learn the skill and trying to understand how trading works. Bad entries, another way of losing money. So now let's talk about the terminologies in Forex. We have what we call volumes. I won't cover all this today. In fact, I think we'll even stop here. We'll stop here. We'll continue on this particular aspect later because this needs a lot. You guys need to have downloaded TradingView and MT5 so that I can explain this. You guys need to download TradingView and MT5. But let me see if I can cover, if I can explain a few of them. But there are some here I won't be able to talk about. Then we'll end for today. Volume has to do with your broker. Volume is the total number of lots traded in a currency pair or in the entire market. So you don't have much, you don't have any business with volume. Spread is the commission your broker charges you on every trade. This is the difference between the buying price. So the buying price and the buying price of an instrument or pairs that a broker take or charges as a commission each time a trade is in place. So spread is basically this whole thing. The summary of this whole thing is this. Spread is the commission your broker just charge you on every trade you take. That's the summary of these things. Your leverage is a virtual loan. In fact, every trader uses leverage. Every forex trader, because your broker will automatically just give them to you. Your broker will give you leverage. Leverage is a virtual loan that you will not see, but your broker has given it to you. It's a virtual loan that has been given to traders by the broker, which give them the opportunity to increase their lot size or to increase their risks more than you have in taking a trade. So leverage is something your broker will just give you, but yeah, it's not going to be visible in your account balance. But it's them just giving you a virtual loan so that you can be able to take more risk on the trade. You understand? And also, as retail traders, you understand, if we are to trade with our $100, our $200 account, you understand, or our $1,000 account, we won't be making money that much. We'll be making money in cents or in $2 or in $3. But because of leverage, a $100 account can make $500. Because of leverage, can make $1,000. I do it a lot. Like today now, this evening, I just did one $20 to, I did one 200K. I did one $20 to about 100 and something dollars this night before I even started the class, because I wanted to pay a bill. So that's leverage. So I can't do that on a regular, on a normal, like just normally. I can't do that normally. But because my broker gives me leverage, you understand, I can be able to do that. I can be able to take any amounts to any amounts of money. You understand? I can be able to take small money to any amount of money because of leverage. But leverage can also, however, can amplify both profit as well as losses. The same way it can give you profit is the same way you can lose your money if you over leverage. So I think that's it. The stop loss is an order that, this is a peg used by the trader at a decidable price, which shows the maximum amount of money or your capital you are ready to lose or part with. A stop loss order is a risk management tool allowing a position to be closed. So a stop loss is something that your broker is an order that you set so that you don't lose all your capital. You'll be able to plan that, okay, this $100, I want to lose only $20 inside it. You can only do that with the help of stop loss. Do you understand? So stop loss is what is going to determine, okay, you can determine that I want to lose only $20. You understand? So stop loss. So stop loss order is a risk management tool that allows you to lose a particular amount of money. You understand? Allowing you to close a position once it reaches a specific price. This protects against further losses on an open position if price continues in an unfavorable direction for the investor. So let's say price is going against you, you understand? So stop loss will protect you from losing more than you planned. You understand? So you can set it, it's an order you set on your MT5 anytime you take a trade. Take profit. Take profit is the opposite of stop loss. Take profit is a peg set by the trader at a decidable price level that shows the maximum amount a trader is willing to make from a particular trade. A take profit order is a risk management tool allowing a position to be closed automatically once it reaches a specific profit goal. This is a good money management order that helps you to close your profit. So the take profit helps you in times of greed, sha. It just helps you to not be greedy. So once you set a take profit, once the market gets to your take profit price, it will just automatically close. Instead of you now, because you don't, if you are someone that is greedy, if you do not set take profit, market can get your take profit price and reverse and still hit your stop loss. So that's why it's always good most times to set a take profit if you are the greedy type. But if you are not greedy, you basically not need take profit. If market has gotten to your specific target, you will just be able to close by yourself. Any question?
No question.
Okay. So
Okay, I have a question.
yeah,
So in every trade, we must set a stop loss and take
yes,
profit.
yes.
Okay, thank you.
So you must set stop loss in every trade and take profits. So anyway, that'll be all. We'll continue this session tomorrow. There are some things I'm supposed to show you. This lot size, I don't talk about it today and peeps. They kind of need the calculation, and I want to show you guys that one. So we'll continue this class. No, we don't have class, so